We've been making some additions to our portfolio, and especially in the enterprise SaaS market, including Salesforce. We just purchased a little bit of that back a couple of months ago. Salesforce just had their earnings and they completed that acquisition of Informatica.
What follows is an excerpt from one of our recent CSI Live events. And if you want to access these live and get access to all of our research, you need to check out Semiconductor Insider.
You can get access to that membership over on chipstockinvestor.com. Check it out, link here and in the video description below. So Salesforce has completed the acquisition of Informatica 3 months ahead of schedule, right?
Yep.
Pretty impressive.
Yep. Good
Way
stuff.
to go, guys.
But that's not what they talked about on the earnings call.
Yeah, if you could summarize the earnings call, it would be, let's talk about Agentforce.
75 mentions that we counted of Agentforce on the earnings call.
Informatica is going to be a big part of Agentforce. So
yeah, absolutely. Let's break it down. A few months ago, when we talked about Salesforce, we talked about the financials of Informatica and how that would affect Salesforce. But let's maybe talk a little bit more about what Informatica does. So here's Salesforce's explanation from their press release a couple of weeks ago when they completed the purchase of Informatica. If you could sum it up, Informatica is software infrastructure. It's what helps deliver the data that feeds into these Agentforce products, these agentic AI products that help automate various activities that a customer may use it for. In particular, maybe it's something like the Salesforce Marketing Cloud, and there's a lot of automations that a marketing team already benefits from in Salesforce, but the agentic AI increases the autonomy of that automation. It all has to do with data, though. You have to connect the right data at the right time to these AI agents to get the automations to work.
And where will Informatica fit in? We'll be putting it right there with MuleSoft and Tableau and the Agentforce integration and Agentforce analytics. And in this last quarter, it grew 6% year over year. We'll expect that'll improve with this addition of Informatica.
Let's hope so. That is kind of the big laggard here in revenue growth, as well as the Agentforce marketing and commerce, only 1% growth rate. We really need to see these agentic AI products expand beyond the very core use case right at the moment. That's Agentforce 360. So maybe as it gets better, the hope is Informatica will help make these products better outside of just the Agentforce 360 platform, and data integration will hopefully drive more revenue growth. It's going to take some time though. So perhaps maybe in fiscal year 2027, which will begin in January of 2026. A little bit more about what Informatica does. We have it listed there in the middle on the infrastructure layer. Casey, break it down in simple terms. How does this work?
Well, Informatica is a data integration and data pipeline software infrastructure. So that's why you see it there in the middle. But customers bring their data to Salesforce. That data gets integrated into their Agentforce products. It gets cleaned up and delivered by Informatica. So it's a full stack system, theoretically.
And we do have the little supply chain tool on Salesforce on the web app that needs fleshed out a bit more, but that is available as well. Some of the investments Salesforce has been making is more on this infrastructure layer and helping bolster their data cloud products. So Salesforce kind of evolving a little bit in what it historically does, not just an end product service that helps companies manage data, but now also getting a bit deeper into the infrastructure layer as well, needing to redo the piping, so to speak, in order to make all this AI stuff work properly.
And then let's take a look at what Informatica brings to the table. This is their revenue, net income, and free cash flow over the past few years. Revenue, almost $2 billion in last trailing 12 months. Net income, slightly negative, and free cash flow at $400.5 million. So this is going to add around 5% of revenue and 3% of free cash flow to Salesforce.
Let's see how that looks like. Obviously, it'll change as Informatica's financials get updated in the coming quarters. So the deal closed in mid-November, which was after the start of Q4 of Salesforce's fiscal year. So we're just going to look at the guidance instead of the Q3 and year-to-date results because that does not include Informatica yet. But here's the revenue for the full year, roughly 41.5 billion in revenue expected, about a 9 to 10% growth rate, or more squarely, about 9% if you back out the positive effect of currency exchange rates. In Q4, revenue is expected to grow about 11 to 12% year over year. So there is going to be that partial benefit from adding Informatica. They mention here about 3 percentage points contribution. We're looking at Salesforce pre-Informatica, excluding Informatica, growth rate of about 9%, in line more with the full year growth rate. They did slightly increase their expectation for GAAP operating margin and on an adjusted basis at 34%. So we are still getting the effect of profit margin expansion, even as revenue has decelerated in recent years of Salesforce. So the two-part growth story is still at work. And our hope would be all of this kind of reaccelerates a bit as we head into the new year.
Shares are currently trading at 34x price to earnings on a GAAP basis, and then 21x price to earnings on an adjusted basis, and 18x on trailing 12-month price to free cash flow.
So you may remember we added a bit to our Salesforce position earlier this year, and we've been making a couple of purchases of enterprise software companies as of late. This is where we currently see the value in the market. At some point a couple of weeks ago, I think we misspoke and said Salesforce was the only big enterprise SaaS company we own, but I guess we weren't really thinking of ServiceNow as being that big. Like Salesforce is double, maybe even almost triple the size of ServiceNow's revenue.
Yeah.
We didn't bail on ServiceNow. We still have ServiceNow.
If that was the perception, sorry about that. We also have smaller companies, Monday.com, UiPath. We renewed a position in that. GitLab, we took a small position, and Figma finally took a nibble on that one as well.
The bottom three are new additions: Salesforce, ServiceNow, Monday. We did also add to Monday.com a couple of times this year. So if you kind of look across not just these companies, don't copy these blindly. That's not the point of showing you this. This is just transparency. But if you look across the enterprise SaaS industry, there is potentially a lot of value out there. A lot of these companies are reporting re-accelerating revenue as their R&D work starts to pay off. Or in the case of Salesforce, they're back on the merger and acquisition hunt again. And earnings multiples for many of them are trading at, or in some cases below, all-time lows. So that's where we're seeing value. It seems like everybody these days is a semiconductor expert and wants to talk about semiconductor stocks. That's great. But valuations are elevated for a lot of companies in the semiconductor world. And so this is where we're seeing more value.